What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we continue to see more selling as we're right back down to the September lows in the S&P 500 and the Nasdaq 100 is making brand new 52-week lows. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today in SPY we are down 0.76% and we see SPY coming back down to retest the September low right around SPY 357, and so far we are seeing a little bit of a bounce at that level. Now remember, we're in a trading range on SPY between about 357 to 358 all the way up to about 378. We are going to wait for a price action confirmation of a breakout. But at this point, with the triple Qs breaking down to a brand new 52-week low today, it does look like SPY is just lagging behind. So we don't know for certain, but it does appear that SPY does want to break down to a new low, and that is going to be the price target down there at 350. But as you can tell, there is going to be some support and some buyers at the previous low. And that is why we did see somewhat of a bounce before we undercut that level today. Now remember, we are in a very strong downtrend of lower highs and lower lows. So do not be trying to go against the trend unless you are accumulating as an investment, because as a trader, you don't want to go against the trend for any prolonged period of time. So watch that critical support around 357, and that's also going to be right around our 200 weekly moving average, which is very critical we stay above that level if the S&P 500 wants to avoid going into a secular bear market. Now, if we do start to get a bounce, we're going to have resistance right around this zone around 372, which is the gap fill. And then if we get the breakout above 378, that is going to look a lot more bullish, but we will need confirmation with the price action and can't make any assumptions we're going to get any bullish breakouts. We'll need to wait for price action to confirm it. On the Nasdaq 100 triple Qs, we were down exactly 1% today, and as you could tell, the triple Qs did undercut the low from September 30th, which was right there, right around 267, and today our intraday low was in the 263s. So without a doubt, this could be a leading indicator that the S&P 500 is about to break down to about 350, and as you can tell, these Bollinger Bands are starting to squeeze, so there is going to be limited downside until those Bollinger Bands expand. Our downside price target below 267 is still down here at 258, and if we do start to bounce, we do have the possibility to go all the way back up to that gap fill just above 279. And that is also going to be right around our resistance trend line from 279 up to about 284. The bulls need to get all the way back over 284 to break out of this downtrend. And it does look like the bears get the first break of the trading range because the bears did break the support at 267 today. So with the strong bear trend and the price action breaking to a brand new low, price action and trends still favor lower prices and still favor the bears. On the Dow Jones, we were down 0.34% today, and the Dow Jones continues to look like a bearish island reversal from the highs right there, right around 303, with another daily closing low. The Dow Jones is very likely trying to fill the weekly gap at 285, but it'll need to break that support off the previous bounce at 287. If we continue lower below the gap fill, the next supports will be right around 281.8 and 276, and the bulls will need to break back over the gap fill just below 299 and that critical resistance at 303. On the Russell 2000 IWM ETF, we were down 0.56%, and the Russell 2000 is starting to lose that support right around 168. But overall, the small caps do look relatively stronger because they are still away from their June lows and their September lows. Also in September, the low did not undercut the June lows, so we're definitely seeing relative strength in the small caps. That doesn't mean it still can't break down going forward, so watch that next support at 163.75, and if that level fails, we do have the next price target at 159.5. To the upside, we have the gap fill right around 173 and that critical resistance breakout at 176. On the ARKK ETF, we were down 3.28%, and ARKK is continuing into the bear market, breaking down below the June closing low, which was right there at 36.5, and it does look like we're well on our way to the next price target at 33.7. Upside resistance is now going to be right around 38 and 40, and if we can get a bull breakout above 40, we have the previous daily high just above at 41 and resistance at 43. This is clearly a strong downtrend, and this is still clearly in a very strong bear market. On the VIX, we are up 3.54% as the VIX continues to close back over 30 for the third day in a row, and we continue to see the VIX making higher lows and higher highs, so the VIX is still in a bull trend. The next higher high breakout for the VIX is going to be a break above 32.6, and that should confirm that we are going to get that next leg lower in the S&P 500. If for any reason we see the VIX getting crushed back down below 30 and then breaking back down below 28, that is going to favor a bullish scenario, which could mean that the S&P 500 could get a double bottom off the September low. On Bitcoin, we're currently down 1.67%, and Bitcoin is coming back down towards this very critical support at 19,000, and it seems like we have been at this support level for many months now, and we continue to ping pong between 19,000 and 20,000. At this point, the bull breakout will be above 20,300 and the bear breakdown will be below 19,000. Below 19,000, you're looking for the next leg lower at 17,000, and above 20,000, you're looking for the next leg higher at 22,000. On Amazon, we were down 0.78% today as Amazon is back down at this support around 113, and we'll need to see this level fail to get the next leg lower at 106, but as you can tell, the Bollinger Bands are starting to squeeze. If we get a bounce off of 113, it could look like a double bottom if we break the neckline at 121, and we also do have a gap to fill to the upside just above 119. If we get the bull breakout above 121, look for the gap fill right around 126. On Microsoft, we were down 2.13%, and Microsoft is completing that next leg lower, which again looks like a leading indicator that the rest of the indices are also going to make that next leg lower, and Microsoft has been a very good leading indicator. You could tell Microsoft blasted right through 231 and did find support just below 227. And at this point, we should be finding a low in Microsoft that could lead to a tradable bounce. As you can tell, the Bollinger Bands are squeezing, so Microsoft does not have a lot more downside without a bounce, and the bounce could take it all the way back up to 242 or filling the gap around 244. On Nvidia, we were down 3.36% as Nvidia has another closing low below 122, and at this point, it's extremely risk off until we can get back over 135. Back over 135, we can look for the gap fills above, but while we are trading below 122, this is starting to look like full-blown capitulation in Nvidia. On Tesla stock, we were down 0.05% as Tesla blasted through the double top price target at 231 and hit our next price target just below 219. I do expect to see a bounce off of 219 back up to about 235 to fill the gap, and possibly even higher to about 242 or 250. Now after that, I would expect another leg lower and retest this support down here at 209. And if we see Tesla breaking down below 209, we are very likely going to get a flush as we see capitulation in this stock, and we do have earnings coming up right around the corner. On Apple stock, we were up 0.24% today as Apple is trying to find support off the previous low at 138. But if that level does break down, we'll be looking for the next leg lower at 136 and then the gap fill at 133. And if we break through all of that support, we have the previous low at 130. Now, if we do get a bounce off 138, we could go up to fill the gap at 145 and retest that resistance at 147. But as you can tell, Apple is still very clearly in the downtrending channel. On the financials, we were down 0.45% as we continue to look like a bearish island reversal back down towards the support right around $30. The industrials were up 0.35%, finding support right around 85, but still looking like a bearish island reversal while that gap is above at 86.5. The healthcare sector was down 0.63%, coming back down towards support at 121, and if that level breaks, look for a retest of the June lows at 120. The energy sector was down 2.05% with a continued rejection from that resistance just below 83. And if we continue lower, look for a retest of the 50 EMA and 20 simple moving average right around 77. So jumping back over to the S&P 500, this is still a very strong downtrend, and it does look like the S&P 500 will try to make that next leg lower and hit the price target at 350. But we are getting very oversold as the Bollinger Bands are starting to expand. So I would not be expecting too much more downside even if we do undercut the September lows. So yes, we are very likely going lower, but that doesn't guarantee this is a great shorting opportunity because we could still get a very strong bounce out of the hole, and we still do have this gap to fill to the upside just below 373. So continue to respect the trend, but try not to get too bearish near support because with volatility this high, you could still get very strong counter trend rallies. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that sends you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. If you want to learn more about Bank or want to subscribe, you can click on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.